Let's talk a little bit about whether or not these kinds of issues and things can be resolved by a fee structure. I will say, Jamie,
Sure.
I was flying from Austin, Texas, back to New York just this past week. We got delayed for weather by hours, and I understood why, because there was a ground stop in New York City. What exactly can customers expect?
Well, as Phil just alluded to, we don't have the fine print yet in terms of what the administration is actually going to recommend. In the scenario, in your example, for a weather-related delay, I would suspect that, unfortunately, there'd be, no compensation, coming your way. So we don't actually have anything yet to analyze, but we do know this. Whenever incremental expense is placed on airlines, whether it's higher fuel, a new pilot contract, having to compensate passengers, the ability to put that to passengers is always more challenging for those airlines that really target the most price-sensitive passengers, the really elastic end of the demand curve. So, we'll analyze the details when they come out, but my initial view is that this is a discounter airline tax.
Okay, so that means if you look at the overall kind of pricing scheme for commercial airlines, Jamie, that the Deltas, Americans, and Uniteds would fare better on a relative basis compared with the Southwest, JetBlue,
Yes.
perhaps, and maybe the Frontiers.
Yes, that would be our conclusion. For example, I've seen it suggested that airlines will have to be able to interline passengers. So if your passengers are disruptive or disrupted or disruptive, I suppose, you'll have to have the ability to place them on a competitor. American, Delta, and United already routinely do that. The reason discounters don't is because there's cost associated with it. There's technology associated with it. There's training and headcount associated with it. So your conclusion is absolutely correct. We would think that the relative pressure would be felt more on the discount airlines who, right now are no longer maintaining that margin high ground that they once did, which was one reason that we made, several ratings changes this morning.
Yeah, Jamie, to that point, and I wasn't sure if the, deals had anything to do with that as well, some of the uncertainty there. But, man, taking American to overweight when that was supposed to be the one that came through the pandemic in the worst shape with its debt and everything else, just talk to us about why you now think that has such opportunity.
Well, look, I'm fortunate because I work very closely with JPMorgan's airline credit analyst, Mark Streeter, and Mark and I have both been impressed with the speed at which American is bringing its balance sheet under control. And that really is largely a function of just how strong the demand recovery has been. It's somewhat paradoxical. If you think back to the second quarter of 2021, American was losing money. Demand trends were very, very poor, and that's where its debt peaked at close to $50 billion on a gross basis. And yet the stock today is 35% lower. Despite American returning to profitability, the demand recovery is well in excess of what anybody was hoping for in 2021. And they're about 60% of their way on the way to that, reducing long-term debt by about $15 billion by 2025. Normally, when airlines go from losing money to making money, when fundamentals get better, when balance sheets, start to get brought under control, that's a reason for stocks to go up, not down. That was the crux of the recommendation.
Makes sense. I mean, again, Jamie, thank you so much for joining us today. A lot of news in the space, yours especially. We really appreciate it.